To the markets now, the JSE closing just over 1% in the red today. One of the biggest laggards were the top 40 shares as well as the industrials. We've got Gary Booysen, Director and Portfolio Manager, standing by to break down those numbers for us. A very good evening to you, Gary. And let's start with that overall market performance today. Not a great day on the JSE. What would you say were some of the biggest contributors to the lagging performance on the local bourse?
So we actually saw a recovery in financial stocks and resource stocks. Financial stocks up about 0.4%, resource stocks up almost 0.7%. So it really was coming all from the industrials, down 2.8% on the day, and that was being led lower by the likes of Richemont, which are down significantly, even though they got an upgrade from Barclays on their foreign listings. So yeah, a little bit of a head scratching one there, but overall we did see quite a bit of company news coming out as well. We saw the likes of Spa coming out, that retailer down around 15%, that also just dragging the overall index a little bit lower.
Yeah, let's speak about the rand before we get into those company updates, Gary. It's really struggling to find some form of stability, trading at around 1976 at the moment. Your thoughts on the local currency and where it's headed?
Well, it seems to be headed towards 20. That seems to be the feeling by most traders, that we probably will go and ping that psychological level, and you can kind of understand why. Part of it is going to be obviously the domestic picture. We had the South African Reserve Bank out with statements just highlighting the damage that could potentially be caused by sanctions, should the US decide to levy them on South Africa, thanks to our non-aligned stance on the Russia-Ukraine conflict. But there is also international factors at play here as well. So you've got obviously the debt, the pending deal, hopefully, on the debt ceiling. The US will run out of money on the 5th of June unless they can come to an agreement and pass it in the Senate, pass the bill as it stands in the Senate. And that's adding to, I suppose, the frustration. We also had JOLTS numbers out today, just showing that job openings in the US are increasing, more than people expected. And that just, I suppose, stoking fears around a hard landing in the US. And that's fueling the idea that, fueling the risk-off trade. And we're seeing money moving back towards dollars. So the dollar index is up slightly, and that's pushing that rand-dollar pair, all the way up to where it was 1780 a little bit earlier on.
Yeah.
Oh, yeah, it's 1980, not 1780. Yeah. Wish it was 1780.
Wishful thinking, Gary, wishful thinking. Company updates, and I want to start with Spa just because you mentioned it. Very interesting. I saw AB InBev had an update a few weeks ago, and they showed a 30% increase in people buying non-alcoholic beer. In today's update by Spa, we're seeing a drop of alcohol sale, well, Spa liquor, just at around 1.9%. Are people just not interested in alcohol anymore, or is it a sign of the times where people are prioritizing what they spend their money on?
I think it's also partly an influence on just a high base effect. So, Tops at Spa obviously also being affected by the COVID lockdowns, and that's showing a massive increase in liquor sales. Spa in the update today saying that the 1.9% decrease is really just that base effect playing through. It's not really that people are drinking that much less. But if you look at that Spa update, however, grocery wholesale up 7.9%, looking good, but obviously selling prices up 10.8%. So that just tells the story of volumes on Spa. It's a difficult environment that they're operating in, and they're highlighted among their retailers because remember, Spa has a decentralized distribution model. It's essentially franchise owners. Load shedding cost their franchisees around 700 million in additional costs. Paying for diesel. Even their distribution centers, which have modern solar, just can't account for the amount of energy that they need, and that cost also tripled. So while the headline numbers did look okay, you can understand why the share price was marked down as it is. It's just another retail update in a string of very poor retail updates that we've seen this week.
Yeah, really tough operating environment. Gary, thank you very much. That is Gary Booysen, who's the Director and Portfolio Manager at Rand Swiss, and that is all your business.